Congratulations, you got a 10 lakh rupees package. Now, before you go all out partying with your friends or buying that iPhone, let me give you a reality check. Taxes. On this package that you just bagged oh so proudly, you're gonna have to pay taxes. And that can be as high as 30%. What a buzzkill. But no need to get so upset because in this video, we are going to talk about how to pay zero tax on 10 lakhs per annum income legally. We are going to talk about your salary slip, which includes your basic pay and all the other perks that are given to you and what amount is actually taxable. Then we are going to talk about the regimes, old and new regime, and which can be beneficial according to your circumstances. Then we are going to talk about the variables which will determine how your taxable income might differ according to your age, gender, and then we are going to look at some basic calculations taking a hypothetical example. Now before we begin, a quick disclaimer that taxation depends on individual circumstances. Yes, it is possible to pay zero tax on 10 lakhs per annum. However, majorly it depends on a lot of variable factors. Whether you're a homeowner, whether you have taken any insurance, whether you have taken any loans, whether you are living in a rented house, whether you are doing any investments. Taking all of these things into consideration, your tax will be varied, but we can claim a lot of deductions and reduce it, if not make it zero. So I hope that is clear, and now let's talk about how to pay zero tax. First, let's talk about your salary. Now, your salary can be broadly divided into two categories. First is basic pay, the basic amount that you'll definitely be getting each month or annually, on which no deductions, no exemptions, nothing is available. This amount is wholly taxable. The other part of your salary are different perks that are given to you by the companies. Now, these may include allowances such as house rental allowances or leave travel allowances. This may include your gratuity. This may include your PF contribution, etc. Here's an example of the salary slip. Now, according to the law, basic salary has to be a minimum of 50% of your CTC. The rest can be structured as per your company policy. So, for a 10 lakh CTC, 50%, that is 5 lakhs, has to be your basic salary. That amount will be wholly taxable. The game plan here is to manage the rest of the 50%. Now, before we start talking about the deductions or the exemptions available, we'll have to sort out the regimes in place. Now, as per the Income Tax Act, in India, there are currently two regimes. The old regime, for which the tax slabs are shown here, and the new regime for which the tax slabs are shown here. This new regime with these tax slabs is applicable from this financial year onwards. However, you can opt to choose for the old tax regime also, depending on your circumstance. The first major difference between the two regimes is the difference between the tax slabs and the tax rates applicable on those particular slabs. The second contrast, which makes a huge difference for any salaried individual to save their taxes, is the deductions that are available under both regimes. First, we'll talk about the old regime. Now, under the old regime, there are multiple deductions and exemptions available, availing which you can reduce your taxable income by a lot. Let's quickly talk about the popular ones. For example, house rental allowance. If you are living in a rented apartment or a rented house and your company is giving you HRA, then the amount that you're paying as rent, that you can claim as exemption from your gross salary, thereby reducing your net taxable income. If you're confused about what is net taxable income here, you can watch this video to understand the concept a bit better and then continue watching this video. Now, claiming HRA comes with a certain limit. The amount that you can claim will be dependent on these three conditions, the lowest of which you will be eligible to claim up to the extent of the rent that you're actually paying. Now, HRA can be 20, 30, 40% of your CTC. That is dependent on your company policy. However, for example, you're living in a metro city and paying a rent of 25,000, which is very normal for a city like Delhi, then your annual rent will be 2 lakhs. And if your company is giving you that much amount, then it will be possible to claim the whole 2 lakhs as exemption from your salary. Other exemptions include leave travel allowance. If you're making a domestic trip by yourself or with your family, then you will be able to claim those travel expenses. However, there are conditions related to this also. You can claim LTA twice only in a period of 4 years, and these are the other minute conditions that you will have to satisfy. The other exemption includes meal coupons, then there are conveyance allowances, then there are uniform allowances. So all of this depends on your company policy, how your CTC is structured. If you are incurring those costs and if these allowances are given by your company, then yes, you will be able to claim all of these exemptions. Now comes deductions that are given to you by the law, and that is uniform for each salaried employee. First is standard deduction. Now standard deduction is a deduction that is available to all salary taxpayers and pensioners. This amount is 50,000 rupees. So if you claim this deduction, you'll be able to directly deduct 50,000 from your gross income and reduce your net taxable income amount. This deduction is also available in the new regime. After this comes section 80C, the most popular tax saving section. Under this section, the government has provided all taxpayers with various instruments in which if you invest or if you decide to put your money, then you'll be able to claim a deduction of the amount that you'll be putting. So this is the list of instruments under section 80C. Now, for example, if you decide to invest in ELSS mutual funds, or if you're contributing to a provident fund account, then the amount that you're contributing to each of these funds, that amount you'll be able to claim as deduction from your gross income and reduce your net taxable income. Now, point to note here is that this section has a cap on it. Whatever investments that you're making of how much ever amount, you'll be able to claim a deduction of rupees 1.5 lakhs. So this section provides a pretty good way to not only save taxes, but also invest and grow your money side by side. Next, we have section 80D that talks about medical insurance. If you have a medical insurance and you're paying premium, then you can claim up to rupees 25,000 as tax deduction. A bonus point here, if your parents have insurances and you're paying premiums for them also, then that amount also you will be able to claim as deduction under this section. If your parents are senior citizens, then that cap increases to 50,000 rupees. Now, if you're a homeowner or if you have decided to buy a house and you have taken a loan on it, then it doesn't mean that you're only shelling out money. That money that you're giving as loan, the interest can be claimed as tax deduction under section 24 of the Income Tax Act. The limit here is 2 lakhs. Similarly, if you have education loan, then the interest that you're paying for that amount also you will be able to claim. And if you're someone who does a lot of charity or donate to different institutions, then depending on the kind of institution you're paying the money to and the kind of payment that you're making, that donation amount also you will be able to claim as deduction. Another deduction option that is available to taxpayers, however, it is not popularly known, is contribution to the National Pension Scheme. If you decide to contribute to this scheme, then apart from the 1.5 limit of section 80C, you can claim an additional 50,000 as deduction from your taxable income. Now, when I talk about NPS contribution, apart from section 80CC D1, where you are yourself making a voluntary contribution to this scheme, if your employer is also making contribution to the scheme on your behalf, then 10% of that contribution also you will be able to claim as tax deduction. This is in addition to the contribution that you are making. These options, section 80C, 80D, NPS contributions are available to all taxpayers irrespective of their job status. But these options are a boon to especially salaried individuals. Now, the deductions and exemptions that we talked about are all available under the old tax regime. Now, under the new tax regime, we have lower tax rates, wider tax slabs, standard deduction available to us, and the NPS contribution made by the employer to be claimed as deduction available to us. Now, we saw the tax slabs and tax rates for both the regimes. Now, under the old tax regime, if your income is up to rupees 5 lakhs, then you will be eligible to claim tax rebate and make your tax zero. Under the new tax regime, this tax rebate option is available to income up to rupees 7 lakhs. Now, as I said in the starting of the video, most of the tax that you are paying will be dependent on a lot of variables. For example, your age and your health conditions will decide the amount of premium that you will be paying for your insurance and what amount you will be able to claim. What kind of job do you have? Whether it's a government job or a private job, because that will determine the NPS contribution made by the employer. So like this, there are a number of other variable factors that will decide the tax that you will finally be liable to pay. Now, let's quickly talk about a hypothetical situation where your income is 10 lakhs and you have these all options available to you. How to pay zero tax on this? Your motive here as we discussed, will be to make your income come down to 5 lakhs so that you will be eligible to claim tax rebate and thus make your tax zero. Now, first option is to claim HRA. Second, you have LT available to you. Third, if your company is giving you meal coupons, then that you can claim as exemption. After this, you'll come down to a gross salary figure. From this gross salary figure, now you will be able to claim deductions that we talked about. Now on the screen, you will be able to see clearly what your income is and what kind of deductions you can claim under the old tax regime and under the new tax regime. This will be your gross salary, and then this will be your net taxable income, which will finally decide what kind of tax you will have to pay according to the tax rate of that particular tax slab. So this is how you can save a lot of tax on your 10 lakhs per annum income by claiming exemptions, by claiming deductions, by doing careful financial planning and allocating your money as per your circumstances in the start of the year itself. Now again, I would like to reiterate that this is not absolute. Each individual has different circumstances and therefore different tax liability. Take the points that we discussed in this video as a guide and do your tax planning. Use the deductions and exemptions available to you judiciously, and I guarantee you that you will be able to pay a lot of tax. If you have any specific query, then you can always comment it down below and I will answer it personally. I hope that this video helped you and now you have a better idea as to how to do your tax planning. Do let me know what other aspects of taxes would you want me to cover, and I will definitely make a video on this. Thank you for watching and I will see you on the next video.